Australia is facing its weakest economic growth in decades. Economists are warning Sydney property prices could have further to fall. 19 of Australia's 34 leading economists now expect no interest rate cuts until 2027, and the Sydney auction clearance rate market is stuck below 40%. Let's unpack exactly what it all means for property owners this week. Howdy everybody, Ben Southwell here. This week, taking a look at everything impacting Sydney's property market. As we often say, property doesn't operate in isolation. Consumer confidence, interest rates, employment, and the broader economy all influence how people buy and sell real estate. So let's take a look at the biggest stories making headlines this week. Australia faces its weakest growth slump in decades. Deloitte Access Economics released one of the more sobering economic reports we've seen this year, forecasting Australia is entering its weakest sustained period of economic growth since the early 1990s recession. Economic growth has been revised down to just 1.3% this financial year, improving only marginally to 1.9% next year. That's 2 consecutive years below the 2% level generally associated with a healthy economy. The report also argues that Australia's headline GDP has been flattened by rapid population growth, masking years of underinvestment in housing, infrastructure, and energy. Whether you agree with every conclusion or not, it paints a fairly challenging backdrop for consumer confidence, and confidence remains one of the biggest drivers of property markets. Hold on to your hats. HSBC warns the property downturn isn't over. HSBC chief economist Bloxham certainly didn't hold back this week, warning the property downturn is only just beginning. HSBC is forecasting an 8% national housing correction through to the end of 2027, but the Sydney figures particularly interesting. Sydney dwelling values have already fallen 3.2% over the past 3 months. If that current pace decline continues over the year, we're looking at an annualized decline of more than 12%. This is the trend line buyers are managing, and why for many in the market now, it feels like catching a falling knife. Now, 19 of 34 economists say no rate cuts until 2027. Interest rates remain one of the biggest talking points this week, and the AFR released a survey from 34 of Australia's leading economists, with 19 now forecasting no rate cuts until well into 2027. Some remain even more hawkish, including former Reserve Bank Assistant Governor Lucy Ellis, who continue to forecast another 2 rate increases before the end of the year. Financial markets themselves, they're already pricing in around a 56% chance of another increase by December. Of course, forecasting interest rates has become one of the great financial challenges in recent years, but one message is becoming increasingly clear. High borrowing costs may remain with us for longer than many Australians had hoped. Now to the Sydney auction clearance rate market. It remains under pressure. Auction numbers continue telling a very similar story. While Cotality continues reporting national clearance rates just below the 50% mark, SQM research remained considerably weaker. Sydney recorded another clearance rate of just 33.97% last weekend, extending a run of around 15 consecutive weeks below the 40% mark. That aligns exactly with what we're experiencing on the ground. The psychology of buyers has changed. It's no longer fear of missing out, it's fear of overpaying. That's why for sellers, pricing, accuracy, presentation, and the right strategy have never been more important. Sellers who adapt to market feedback and are still achieving excellent results, while those chasing yesterday's market are generally finding their campaigns will take far longer. Now to property of the week, 702 at 29 Margaret Street in Rozelle. To finish on a more positive note, we've launched what is genuinely one of the most extraordinary apartment renovations we've ever represented. 702 at 29 Margaret Street, Rozelle is a masterclass in craftsmanship and detail. Meticulous almost doesn't do it justice. The residence offers 3 bedrooms, 2 luxurious bathrooms, secure parking for 2 vehicles, and an exceptional entertaining terrace. But it's the execution that truly sets this apart. From the elevated ceiling heights and bespoke joinery throughout, to hidden speaker systems seamlessly integrated into the architecture, and a stunning marble kitchen anchoring the living spaces, every detail has been carefully considered and beautifully executed. It's a residence that rewards an inspection. The property is now on the market with a guide of 5.8 million to 6.2 million, and if you appreciate exceptional design and quality, private inspections are highly recommended.